Hey everybody, Pete Rizzo, the Bitcoin historian, here to introduce a special guest episode. You're going to hear from one of the true legends of the space. I'm talking about BitMEX co-founder Arthur Hayes, currently CIO at Maelstrom Investments. He's at the forefront of DeFi, has thoughts about the Fed pivot, and of course, all that is in store for crypto in the coming year. Truly one of the great and fascinating minds in the crypto space. We'll leave you now with a special episode from Arthur Hayes.
It's going to be very difficult for the government to politically expropriate assets from those who are in power already to essentially allow everyone to live this utopian lifestyle because of AI. Then what do? You just print a ton of money and hand everybody out and then keep the capital structure the same. By law, the Fed is allowed to print infinite amounts of money to make sure the government can afford to borrow. And so why not do it now? If I had to bet, I bet on the government not wanting to rock the boat and they're just going to print the money.
The Blockworks Digital Asset Summit, crypto's premier institutional event, is coming back to London this October, the 13th to the 15th. You'll hear from top names across global finance, DeFi, and policy. Think BlackRock, Circle, Coinbase, and the UK Parliament. Notable speakers already locked in include Danny Masters from CoinShares, Jeff Park from Bitwise, and plenty more to come. There's also a VIP dinner on October the 13th. That's for speakers and VIP ticket holders only. It will sell out. It's all happening at the Old Billingsgate in London. Use code SUPPLY100 at checkout for £100 off.
Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.
Please welcome Arthur Hayes and Felix up to the stage.
Awesome. Like you said, my name's Felix. I'm the host of the Forward Guidance podcast over at Blockworks, which looks at all things at the intersection of macro and crypto. So no better guest to represent that than Arthur Hayes.
Hello?
Hey, good to have you. You are fresh off. You just released a new essay, and I thought, what's the best way to structure this conversation? And I love the way that your essays, which you become quite well known for, among endless other things, is starting off with your high-level macro theme, and then it always ends with, how does that translate into crypto? How does that translate into altcoins? So let's walk through that and start off with, what is your high-level macro framework? You wrote this new essay called 4-7, I believe it was called. Give the high level of that. What's going on there?
Yeah, so the high level is, how does Trump and his boy Besson, Buffalo Bill Besson, get from where they are today, where he controls the Treasury, to where they need to go, which is the Treasury and the central bank, the U.S. Federal Reserve, are working together to print money to accomplish their economic policies. And so this is an essay basically talking about the minutia of how votes happen and how many people you need to have on which board to do what things. And, this bureaucratic quagmire that Trump is going to try to pack his people on there so that he gets the policies that he wants.
Got it. And yeah, let's double click a little bit deeper into this. You mentioned this idea of yield curve control in it, and just a fancy way of saying obscene money printing effectively. How do you discount the probability of that occurring over the next couple of years? And how do you see that progression actually going from where we are today to that end game?
So, if you listen to the rhetoric from both people, Besson just wrote an op-ed in the Wall Street Journal about the Fed's policies. If you listen to Trump and all of his lieutenants, and what's the big thing that they care about? Well, they're really pissed off that the U.S. can't go and bomb everybody that they want to bomb without impunity because they don't have any bombs. So they want to build more bombs, and so they need to have more companies building real things and not just, MBAs doing LBOs in New York. And so they need to print money and revitalize the American industry. Now, it's not that easy to do. And this is what they did during the war in World War II, right? They fixed the yield curve. And in the essay, I had a chart of the yield curve from 1942 to 1951. And the T-bill rate was fixed at 0.675%, like less than 1%. And then 10-year bonds forward were 2.5%. And so this was a yield curve that was very steep. It enabled a commercial bank to borrow from depositors cheaply, lend long, lend money to relevant industries to, juice supply and provide credit. And, politicians are not very imaginative. They go, oh, well, it worked during the war. Then why can't it work now? And that's essentially what they're saying. And even if you listen to recent Fed board member Stephen Moran, he talks about the Fed's third mandate. And relevant, interesting people on Twitter posted the quote from the actual Federal Reserve Act of 1913, and it basically said the Fed is responsible for ensuring a moderate rate of government interest on its bonds. What does moderate mean? Whatever the politicians want it to mean. And so, by law, the Fed is allowed to print infinite amounts of money to make sure the government can afford to borrow. And so why not do it now?
Yeah, so two themes. One, which is this risk of central bank and Fed independence being eroded, and printing a ton of money, which is increasingly likely over the next while, lowering a Fed funds interest rate more so than what you would probably anticipate based on like how much inflation we have right now and where the economy is at. You put those two themes together, I would think, okay, well, Bitcoin is made for this. We should be absolutely ripping and roaring right now. I mean, gold is, equities are, but the crypto market's been stagnating a little bit. What's your read on what's going on there? Do you think it's just a lag thing? And I've seen some analysis where it's often like gold runs first and then Bitcoin follows. How do you think about all of that?
I think it really depends on when you bought your Bitcoin in terms of whether you think this is a bull market or not, right? If you bought a bunch of Bitcoin in 2015, 2013, even like 2020, you're like, yeah, this is great. It's a bull market. Bitcoin, it's outperformed gold. It's outperformed stocks. It's outperformed real estate. But if you're like, oh, wow, they were printing more money starting in March this year or April, and I bought Bitcoin at like 95 or 100 or whatever $1,000, and it's only up 10, 15%. And I feel like a jackass because I was supposed to be the best performing asset. Well, wait a bit. So I think the premise of that question is a bit flawed because Bitcoin is the best performing asset ever, to respond to money debasement. You go back to World War II, and if you think about around the world, where could you invested your fiat dollars or euros or whatever currency if you wanted to escape, right? If you think about the United States, gold was illegal. Couldn't buy gold. You could only buy stocks, S&P 500 or whatever the stocks were at the time. If you were in Europe, you were probably blown up, couldn't buy anything, or the Germans were taking your gold. If you're in the UK, gold was banned, couldn't buy gold. Stock market was a piece of shit because they were getting bombed, so you couldn't do that. If you're in Asia, the Japanese were taking all your shit, so you didn't have anything either. So, we don't have an analog to what we could have bought back in World War II because there just weren't that many assets. But today, we have a stock market globally, relevant countries. You have gold. It's a bit clunky, but you can still buy it. And you have Bitcoin. And we've seen what's happened since 2008 in terms of the price performance of Bitcoin, gold, and stocks. And they've done very, very well, Bitcoin being the best. So I think that you just have to wait a bit.
One of the key premises underlying a lot of the essays that you write about is effectively what I would call this inevitable debt doom loop that most fiat currencies and just fiat economies are basically destined for. And one of the big macro questions at hand that I think ties in nicely to the conference we're at here at the Origin Summit, which is these ideas of technological innovation, AI, and just this inevitable productivity boom that's potential. So there's a lot of questions at hand, which is this the saving grace that can get us out of this debt doom loop? Or is it just something that just won't quite move the market enough to really solve the debt issue? So yeah, how do you think about these AI technological innovations? Is it something that can actually save us from this debt doom loop of fiat currencies?
I think that's a political choice in terms of what are we going to share as humans, right? So imagine that AI was as effective as Sam Altman says it is. It is not, obviously. And all of a sudden, 90% of the jobs are gone. And like, oh, great. Wow, everyone's super productive. We can go and just, I don't know, jack off all day, whatever the fuck you're going to do. And so, but you have you had this thing called a mortgage and a car payment, and you had this thing called rent, and you don't have a job anymore. And so the question is, okay, well, is the government going to mandate that private profits must go to the populace because now everyone's so productive? But then the people who own those companies are, well, hold on a second. I'm Facebook. I just dropped fucking $1 trillion in CapEx. I want my fucking returns. Why am I now giving, universal basic income to all these motherfuckers who weren't investing while this AI thing was happening? I don't want to share. So then, okay, well, then what are you going to do about that? Are you going to just take away private profits and distribute them to people? I don't know. Again, that's a political question depending on where you're based. Or you were fortunate enough to have financial assets and you invested in crypto or AI or whatever, and you've done very, very well. And then there's all these people who weren't, in your case, you believe you were smarter than them or better than them because you have more money, whether or not that's true. Are you going to share? Oh, let's put a 99% tax rate on all capital gains and dividends so that everyone else can share in this amazing AI revolution and productivity boom. Do you want to share? Probably not. And so I think then the question is, okay, well, it's going to be very difficult for the government to politically expropriate assets from those who are in power already to essentially allow everyone to live this utopian lifestyle because of AI. Then what do? You just print a fuck ton of money and hand everybody out and then keep the capital structure the same. And so either you have a massive deflationary event and asset holders are completely wiped out, or you have a massive inflationary event which continues the same social structure, but then the asset holders feel like they've gotten something out of a return for their prescient investing behavior. Again, a political choice. I don't know. But if I had to bet, I bet on the government not wanting to rock the boat, and they're just going to print the money to paper over this big boom, and then maybe we decide to share as humans in this AI and this new ecosystem. So it could be a completely, risk-off event, which everything's worth zero, or it could be a risk-on event where everything's worth infinity, and I don't know what that is.
Do you underwrite the probability of that political decision the same between, say, the U.S. and Asia, and specifically like Korea, where we hear now? Like, I know you're a big fan of Asia. You live in Asia. We're here in Korea, but you write a lot about the U.S., and there's a lot of that inherent cynicism around, we're just going to, print a ton of money and throw it away and that sort of like. So, do you view that as an even probability of governments to resort to that, or how do you think about it?
I'd say you're probably more likely to share over here in a more community-driven society than America. But even still, I think there's an inherent belief that because you have more money, you have done something better than somebody else, whether that's you've studied harder in school or your family is just quote unquote better than somebody else's family. And I think that's going to be a very difficult thing for humanity to overcome, because now we've achieved this sort of plateau of productivity and we're calling upon those who've done the best to share with everyone else, even though they intrinsically believe that they're better than them. So I don't think that goes away just because you have a flatter income distribution structure. Even in China, there's the princelings and those who are very, very rich who believe they're better than everyone else because of the decisions that they've made. I don't know how we're going to get over that without some calamitous political infighting globally.
All right, so it's clear that the government's going to keep printing money and fiat currencies will be debased. Crypto will most likely go up meaningfully over the next few years. With that set up, I want to shift gears into just hearing a bit about what specific crypto themes are you excited about today? Where's your head at? What are you thinking about?
Obviously, we love DeFi at Maelstrom. And if you look at our portfolio, our best performing things, Athena, stablecoins, DeFi. I wrote asked you before, this one was about stablecoins and how I believe that this is the policy of the American empire to try to force dollars around the world, and that's going to benefit the DeFi ecosystem because you're going to onboard millions or billions of people to using these tokens to represent whether it's a fiat currency or it's a bond or it's a bank deposit, what have you. And so we're super bullish on all things DeFi in the medium and the longer term, but obviously there are some short-term hiccups that relevant projects could not do so well in the short term, but in the long term, we're very positive on that kind of stuff.
What's your analysis of Perp DEXes right now? Obviously, you are one of the originators of the perpetual futures over at BitMEX, but I know you're bullish on Hyperliquid, and then you caught a little bit of flack for moving on from that. But yeah, where's your head out on Perp DEXes?
So I think that Hyperliquid could, by 2028, keyword 2028, go up a lot, or whatever the relevant leading DEX is. But I think that Hyperliquid is now going to experience some real competition, and the competition is from low to no fee trading, because they've proven that finally the retail customer is ready for a decentralized trading experience. They're ready to connect their wallet and trade on chain, and they've generated these volumes. Okay, cool. Hyperliquid tries something, 4 basis points or whatever it is, right? And they've proven that there is good alignment between taking your revenues, buying back your token, creating wealthy folks who get an airdrop for trading. Okay, so then what does the next project do? They go, okay, great, I have this token. I'm going to charge 0 for trading, and I'm going to do this massive airdrop. And if you trade on my platform, it costs you nothing in terms of just the fee to me, but you're going to possibly get this lottery ticket that could go up 10 to 100x in the next 3 months. I'm going to vampire squid attack all of your volume, Hyperliquid. And you've seen this with, if you look at the lead table, assuming the volumes are legit. I know there's been questions about that of Lighter and Aster and some of these other protocols, because at the end of the day, from the DEXes, the customer wants the cheapest price. It's on chain. They're not having to pay for security. That's handled by the layer 1 blockchain. So then it becomes a race to 0. And then what value add service does the DEX provide that allows you to charge a fee? And I think that's what we're going to figure out. And in Hyperliquid's case, the issue is that because they have this massive unlock happening in the next 2 months, before all these new competitors started lowballing them, you could say, oh, well, they're going to make however many billions of dollars, buy back the token, and I don't really care about an unlock. Well, if I just have competitors that are offering 0, then I have to somehow lower my fees or do something to keep the traders trading, which could materially decrease the revenue that I make. Well, then now I can't buy back all these tokens that the traders are worried about that my developers will be selling. And that's sort of the situation in the very, very short term that Hyperliquid has to overcome. And we'll see what happens with the microstructure of the market of what are these exchanges going to deliver to a trader in an environment where fees are close to 0. And it's kind of similar to what it was like in mainland China before the PBOC banned Bitcoin trading in 2017, where spot trading was free. There was no fees. And so then how did OKCoin, Huobi, and BTC China make money? They made money on the float of renminbi sitting in the bank. They made money on new issues. They made money trading against their clients. So like, what's the revenue stream for Hyperliquid and Lighter and Aster and all the other platforms if trading's free?
I probably already know the answer to this question, but I'm going to ask it anyway. So do you think that the quote unquote revenue meta that Hyperliquid spearheaded, is that a flash in the pan and it's sort of a race to 0 at this point now?
Well, no, because the race to 0 starts and then, everyone but one fails. And then the one that survives then jacks the fees, just like everything else, right? It's, I'll make it up in volume kind of mantra. Obviously everyone except one person doesn't make it up with volume. So then which one does? Who knows?
So you're not ready to make a claim on who's going to make it. You just have to wait for it all to play out. And then just once you see who the winner is, just ride it from there.
Exactly. Because I think that the decentralized trading experience is superior to a centralized trading experience. And the end customer doesn't realize that the reason why the SEX has to charge more money than a DEX is because the SEX has to pay for security, the wallet security, the security of settlement, whereas the DEX outsources that security to the layer 1 blockchain, and that's in the form of sequencer fees and gas. Again, you're still paying, but you don't equate the payment to the actual service. You equate it to somewhere else over here. And so you believe that you're trading for free, but you're not actually trading for free. It might actually be more expensive in the end, but it doesn't matter. It's all a perception issue.
Got it. So within that framework of the emergence of DEX perps that are just becoming very sophisticated, what role do SEXs play within that world? What's the plan for them, do you think?
I think that the SEXs are still going to be very relevant because there's lots of high frequency trading shops, institutional players who cannot trade on chain or who do not want to trade on chain. They're still a bit faster. If you're talking about high active transaction settlement latency, those sorts of things, like a SEX is still way faster. They'll probably make a lot of money on new issues, right? Until one of these platforms sort of takes over that market. But I still think there's a long way to go before the DEX takes over in terms of the most prevalent method of trading for crypto.
Got it. All right. I want to shift gears to the other big thing that you mentioned there, which is stablecoins. Curious where your head is at in terms of the different types of innovation. It feels like it's just outright stablecoin season right now. We had the Genius Act passed. You mentioned Athena earlier, which you've been invested in, has been popping off. Yeah, where's your head on the story for stablecoins from the macro narrative in terms of being the big buyers of debt, but then also some of the more interesting technological advances?
So, obviously, I think that this is the policy of the U.S. government to get dollars out to a lot more people, whether it's the Eurodollar market or it's ordinary folks who are not in America who'd rather want to have a dollar bank account, but their regulators, for obvious reasons, don't want them to have a dollar bank account, and they're going to use the big tech platforms as their sort of attack mechanism, and stablecoins as a way to dollarize the global South. But in terms of like the technology, it's not that difficult. I think that most of these projects are zeros in terms of these new stablecoin projects, because if you don't have a distribution arm, you don't have a social media company, you don't have a large exchange, you don't have a large sort of MNC, multinational, FMCG business that has lots of clients, you got to spend to get those clients. You have to spend for that network effect, and you're 10 years behind the curve of Tether and Circle and Athena and all these other guys. So then how are you going to get enough money for that? So I think I would never invest in a new stablecoin issuer who doesn't have one of these distribution modes. I think a lot of these local currency stablecoins are zeros as well, because at the end of the day, the clients in these markets want a dollar bank account. That's what they want. Korea, Japan, Hong Kong, Singapore, all these Asian countries, like domestic banking is very good. You can instantly send people money as long as you have a bank account. You can, scan QR code. It's not that bad, right? You don't need a stablecoin. So why would I spend more money in some way, shape, or form to, subsidize this stablecoin issuer building up a network? So I think those are zeros as well. I think the real things that might be investable are, how do you allow small businesses to accept stablecoin payments, whether it's systems or it's some sort of SDK that allows them to easily switch between fiat currency to pay their taxes and whatever, and stablecoin payments from their clients, the accounting mechanisms that these companies will do, like triple entry bookkeeping and those sorts of things. So I think that's a very investable area in the stablecoin space.
This is kind of an out there tail risk question associated with stablecoins, but okay, we've talked a bit about that doom loop situation. It's like, all right, well, if we're going to anchor a bunch of stablecoins to U.S. Treasury debt, and then, I don't know, say we got like a Treasury auction failure or something like that, how do you underwrite the potential systemic risk that, all right, we created crypto to be able to opt out of that doom loop situation, but now we've just backed the entire industry by stablecoins, which are backed by T-bills. How do you discount that possibility of it occurring? And if it were to occur, is that why it's just like, all right, we should always own a little bit of Bitcoin too, because that's the one true asset separated from the rest of that? Or how do you view all of that?
So, I mean, before, Howard Lutnick was the owner of Cantor Fitzgerald, who is also an investor in Tether, was in a position of political power, there was a very big fear of like what happens when someone shuts off Circle and Tether's banking situations. And that was one of the reasons why I put out this idea for Athena, which is, why are we using this dollar substitute that requires the US banking system, which hates us, and we hate them too, to allow it to exist? That's why we should use perpetuals and Bitcoin and other currencies to create this synthetic dollar. And that's why Athena was created. And I think it's done very well. So if we are worried about that scenario where the banking system, turns hostile again, well, we have things like Athena, which do not use the banking system to maintain their peg. Now, if you're worried about, the treasuries not holding a dollar, well, I think the U.S. government's never going to default on a debt, because they have a printing press and it costs them nothing to make sure they nominally make sure that every treasury debt holder gets paid back. Yeah, the real value is whatever the real value is, but on a nominal basis, I'm not worried about, treasury auction failure and all those sorts of things.
Yeah, I definitely agree with that. Last major crypto theme I want to talk a bit about. Obviously, you've been known for your thoughts on DeFi, on exchanges, on perps, et cetera, et cetera. Just want to tie into some of the conversations that are happening here today in terms of this intersection between AI and crypto, this idea of intellectual property coming on chain, basically these ideas of taking things that are outside of crypto and bringing them on chain. What's your high level framework for how to think about all that?
I always think about it as like, what is the most standardized thing that I can trade? It's like, why do people trade lots on these commodity markets? Because you've standardized a contract. Like, okay, a oil contract is so many barrels of oil, and that is in the contract, right? We don't trade all these like random idiosyncratic things because it's hard to get liquidity in one place. So if we're going to have intellectual property traded on a blockchain, I'm interested in what is the most standardizable unit of that thing that I can trade, that we all can agree on to trade is not going to be the idiosyncratic movie or book or whatever that's going to have liquidity. It's going to be something more fundamental that I and everyone else can agree on, that we want to trade this, that's upstream from everything else. I don't know what that is, but when we figure that out, that's what I'm interested in, not just the long tail of assets, because it's very difficult to build liquidity in that manner, in a two-sided marketplace.
All right, final question here. But as somebody that knows the Western crypto industry really well and the Asian crypto industry really well, what is the one thing that the Western side of the crypto industry can learn from what's going on here in Asia, here in Korea, here in Singapore, et cetera?
I mean, I think the big thing is that the people who trade the most and use this stuff the most are here, right? Even it's like stablecoins. You people in the US are like gaga over stablecoins. None of these motherfuckers use stablecoins, but we all use them. You know, I use them in Argentina. I use them in Indonesia. I use them all over the world, right? Because that's where they're needed, and those are the solutions that work. Or trading perpetuals. It wasn't America that started trading this shit. Like, it was Korea that really started trading perpetuals in size when we first launched them back in 2016. So I think, you know, obviously, there's lots of technological innovations that happen in the Western, more, I guess, basically the United States versus the rest of the world. But, you know, Eurasia accounts for like 75% of all human biomass in the world. So it's us who determines what is going to be a successful solution, not, you know, the financial capitalists in New York and Silicon Valley.
Boom, there you go. Arthur Hayes, great to have you here at the Origin Summit. Thanks again.
Thank you.